Even if Elon is able to cut the number of accidents caused by human drivers by 50%, auto insurance rates would still likely decline due to the lower underwriting risk. This would negatively affect Deco's profits, cash flow, and possibly even margins. For the sake of extreme argument, let's imagine that, for some absurd reason, there will only be 3 accidents in the United States the next year. Costs will go down with everything that lowers accidents, but it's been more difficult to accomplish than previously believed. Clearly, if that is true, our statistics and the stats will demonstrate it, and the prices will drop. Hi everyone, and welcome back. We're exploring the seismic remarks made recently by none other than the titan of the financial world, Warren Buffett. His unexpected comments against Tesla have left everyone stunned, and they may have significant implications for the stock's future. Let's explore the surprisingly exciting world of insurance. You read correctly. Insurance can be an exciting ride, particularly when industry titans like Elon Musk and Warren Buffett are in the driver's seat discussing Tesla's autonomous technology and how it would affect society as a whole. Imagine this now. The Oracle of Omaha and investment expert Warren Buffett recently wondered what would happen to auto insurance in a world where Tesla's self-driving technology rules the road. He believes that while Tesla's driverless cars cut accidents by an astounding 50%, it will be a huge benefit to public safety, but a major setback for insurance firms. The insurance industry's volume is declining as fewer crashes result in a decreased need for insurance. In keeping with his usual astute style, Buffett concedes that what's terrible for insurance may actually be good for society. Then, out of the blue, Elon Musk tweets that Buffett might want to buy some Tesla stock to hedge his bets. Classic Elon, converting a difficult argument into a stock recommendation. But let's not forget the past disasters when behemoths like GM and Uber tried to enter into the insurance business and got their financial wires tangled before you go calling your broker. Their insurance hopes became nightmare losses due to mispricing risks. Turning back to Tesla, they are gathering data like a squirrel gathering nuts for the winter. In addition to constructing automobiles, they monitor everything, even your speed and the timing of your brakes in response to that same squirrel darting across the road. Insurance usually seems more complicated than it actually is, but it's also a lot of fun since you get the money up front, and then later on you find out whether you made a mistake. When someone offers you money and you give them a small piece of paper, it's a very seductive business. However, it's important to know whether if accidents drop by 50%, that will benefit society but hurt the volume of insurance business. But what we're searching for is beneficial to society. With all this juicy data, Tesla imagines a future in which your car, when combined with their self-driving technology, not only avoids squirrels, but also lowers your insurance costs. Everyone may benefit from cheaper prices and a cozier ride as a result. It might not be as comfy for conventional insurance executives, who might end up perspiring more than a long-tailed cat in a room full of rocking rockers. What then lies ahead? Less accidents and smarter automobiles may cause a revolution in the insurance sector, which might have a significant impact on existing insurers. However, as Buffett notes, making the shift to this future won't happen quickly. Tesla will need some time to accumulate enough kilometers and data in order to refine their technology. As you can see, and as you most likely already know, Tesla engineers its cars. These aren't just any cars. They are constructed with autonomy in mind and are made to reduce the likelihood that you'll switch paint jobs with other drivers. Once autonomy is employed as the primary means of propulsion for the vehicle, the likelihood that you will be the cause of an accident will be significantly decreased. That's really recent for Tesla. By the way, the miles driven weren't increasing at the rate or slope that Tesla preferred prior to version 12. Version 12 had the hockey stick incident that we witnessed, and the free trial is undoubtedly assisting with that. Tesla's improved car performance and lower chance of collisions are leading us to a safer future. It's possible that Warren Buffett is considering how these developments might affect his own business while he watches from the sidelines. After all, the market for traditional auto insurance declines along with the number of incidents. Buffett should consider hedging his bets in light of these technological disruptions. My intention is to bring up Tesla and their belief that fewer accidents occur as a result of their technology, a claim that can be verified. However, I believe that the rising costs of repairs for each of these accidents also need to be taken into account. Therefore, I'm not sure that the overall number has decreased as much as Tesla would like us to think if you multiplied the number of accidents by the cost of each accident. On the path to an autonomous nirvana, though, it's not all smooth sailing. Although fewer accidents are occurring because to Tesla's technology, the handful that do occur typically cost more to repair. You might wonder, why? Because the complex equipment that powers these high-tech chariots is expensive. Thus, even if the number of fender benders is declining, the financial impact of each one is increasing. The financial savings from fewer accidents that we hope to observe may be somewhat offset by this. This is where the intriguing part really begins. Tesla may be preparing to actively disrupt the insurance sector in addition to continuing to produce automobiles. In a perfect world, your insurance would be provided by your car's manufacturer. By offloading some of the insurance responsibilities to the equipment provider, Tesla's entry into the insurance market may have far-reaching implications beyond simply providing coverage for repairs. It has the potential to completely transform the way that obligations are assigned between automakers and their customers. Indeed, Tesla is altering the game in that way. It's evident from this changing environment that Tesla is blazing a trail that could eventually lead to a new paradigm for automotive economics. Conventional insurers may have to reassess their plans or run the risk of being overtaken by electric vehicle enthusiasts. Now fast forward to the inside look at the mechanics of Tesla's vehicles, which are not only aesthetically pleasing, but also economically efficient. Tesla has switched to a more modular architecture for its self-driving processors and componentry when it comes to maintenance. This implies that we have tidy replacement modules underneath the hood rather than a tangled mess. These high-tech components turn out not to be as expensive to repair as we had anticipated. Therefore, you could be pleasantly surprised if you assumed that fixing a Tesla would cost an arm and a leg, not to mention your firstborn kid. Let's run some numbers now. Reducing the frequency of repairs is what actually lowers overall costs, even when the cost of individual repairs may not rise as originally anticipated. With fewer collisions caused by more intelligent driving technology, the overall cost of repairs may eventually go down. This is a victory lap for sustainability and safety, not simply for your pocketbook. After more than 3 years, 1 billion FSD miles was reached. Less than 3 months will pass before reaching 2 billion miles. We'll see if the question of how many billions of miles are being driven at this time continues to rise, but it appears to have rocketed up. We're approaching escape velocity since computation is adding like crazy. Then he claimed that, as of right now, this is averting 7 crashes daily. The current state of this supervised FSD is 7 crashes per day. This comprises 4 crashes every day when FSD was turned on, subtracted from the 11 anticipated human crashes that were avoided. According to Sawyer, every day that 15 million miles are driven, 1.35 lives are saved each week. Well, I really like this analysis they just made, and hopefully it turns out to be accurate. Now, with just FSD, supervised FSD, and just the beta testers, one person's life may be saved every week. In light of safety, let's discuss benchmarks. Not only is Tesla's full self-driving program saving lives, but it is also accruing kilometers. With more than 1.5 billion miles driven and on course for 2 billion, Tesla's FSD technology is averaging 7 crash-free days per day. Yes, you read correctly. Artificial intelligence prevents 7 possible metal crumples every day. The worst part is that statistical research indicates that this marvel of contemporary technology may be saving 1 life per week. Let that settle in for a moment. You may be enjoying your morning coffee when Tesla's FSD is out there saving the day. However, the Tesla adventure is far from over. It's even more fascinating because every day brings new and intriguing discoveries with ups and downs. Tesla continues to draw investors into its rabbit hole for this reason. But who else is as optimistic about Tesla as you are? That would be Seeking Alpha, our sponsor for today. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. Ignore the lamestream media's anti-Tesla rhetoric. The internet's top pro-Tesla news outlet is Seeking Alpha. Our channel might receive a commission if you click on the affiliate links in the description and make a purchase. I appreciate your help. With driving automation, we're making a significant shift towards the future. It is not merely conceivable. It is unavoidable. It's not like robots are going to take your driving wheel tomorrow, so don't worry. Developing a clear resolution strategy and optimizing the cost structure are key steps on the road to fully automated driving. Tesla's cars get smarter with every software update, much like a good wine that gets better with age, except that it's software and there's no cork on it. Imagine autos that can update to become safer and more intelligent drivers. When you slumber, that's the direction Tesla is taking. Substantial enhancements are not only predicted, but are already planned for the upcoming releases because to the vehicle's continuous increases in intelligence and computing capabilities. Your car is therefore going to transform into a brain on wheels, so if you thought it was only a means of transportation from point A to point B, think again. Elon actually made a comment regarding whether or not Warren Buffett need to purchase Tesla stock. Approximately all of the approximately 160 comments, I believe, responded, no, he is not going to invest. I think otherwise, so let's look back at the beginning of this. Come on, Warren Buffett, sell all your Apple and buy Tesla, is what G is saying because he began selling Apple. Buffett appears to be attempting to accumulate cash because he may be concerned about future events. I don't see anything that's worth buying right now, he replies, sounding a little scared. Elon then declared he ought to invest in Tesla. It's a clear step. Let's change our focus and discuss a possible narrative twist in the financial industry. The Oracle of Omaha himself, Warren Buffett, has received a recommendation from Elon Musk, the maestro of contemporary technology. Elon suggests that Warren may think about investing in Tesla, if just for laughs, but also as a calculated risk management move against his interests in oil and gas. With the globe moving towards electric cars and renewable energy, this might be Warren's secret to keeping ahead of the investing curve. Elon's pitch makes reference to Tesla's potential for fully autonomous driving and robo-taxi services, which go beyond simply showcasing cutting-edge technology to encompass altering the energy industry. Imagine a future in which your car serves a dual purpose for you and the environment by transporting people while you're not using it. Musk believes that's a future worth investing in. You see, he likes all that about Apple. It sees 100, and it recently completed the largest repurchase in corporate history, which amounted to $10 billion. He might start a hedge, but he won't go all the way in one direction or the other. That's also how you would begin, by starting with a smaller portion of your portfolio. Like I stated, these things might decline at a fair slope, but they won't turn off like a light switch overnight. Thus, the insurance industry comes to mind, along with a few other topics pertaining to energy and oil and gas. Therefore, if he could begin with a smaller percentage hedge in Tesla, that might be the best course of action as those factors progressively deteriorate and he progressively increases his Tesla hedge. The Oracle of Omaha, Warren Buffett, has always taken solace in Apple, the apple of the stock market's eye. Its predictability and substantial share buyback are things he values. However, he's thinking about a gradual hedge in Tesla as the winds of technological innovation stir up whispers of change. This is not your average hedge. Rather, it's a calculated move to possibly lessen the impact of any declines in his other heavyweight assets. Looking back, we can see that Buffett's interest in tech equities wasn't always strong. His early misgivings about Apple were rooted in his predilection for companies that were in his personal network. But in the end, he was seduced by Apple's massive cash reserves and ambitious buyback plan. A comparable story is currently being told about Tesla. His misgivings about its volatile CEO and the very competitive EV market notwithstanding, Tesla's innovation's indisputable impact may persuade him. It appears that using Tesla shares as a hedge is beginning to emerge from the mist of financial projections. Buffett might have the flexibility to adapt as the EV and renewable energy environments change if he starts with a modest position. It's a quintessential Buffett move, cautious, methodical, and incredibly astute. It's evident that the investment roadmap is changing as we pull to a stop at the end of our voyage. Whether Buffett chooses to travel with Tesla or not, his considerations give us an intriguing look at the approaches that could shape investment in the quickly changing future. I appreciate you listening. This mix of finance and insight is sure to delight you, so please remember to like, subscribe, and ring that notification bell for more insights. This is news about Tesla stocks. We appreciate your time and hope to see you in our upcoming videos.